Yeah. Good afternoon, everyone. A very warm welcome to the today's session. I'm delighted to be here with you, all of you, and we have a very experienced and renowned uh, Mr. Shailesh being a speaker for this session. Just briefly introducing the theme of the session. So today's our focus, as one of the Udan series, is on the accounting aspects, on how the accounting in Australia works. So from the financial statements preparation till how there are threshold limits. There is a tier one, tier two requirements from financial statements preparation, how exactly the professional accounting works in Australia. So, as a part of the global series, I believe this is a one fundamental aspect to be taken into consideration. As the world is coming closer, we need to understand how things works out of India as well, whether in Australia, whether in other countries, because the cross-border transactions are increasing. So it is very much valuable, and I believe very much learning should happen as to how things works out in the other countries whenever we are dealing with the other countries' entities. India has a lot of inbound and outbound transactions, whether Indian subsidiaries are there whether India has a subsidiaries out of India, or whether India is being a subsidiary where the holding companies may be outside of India. So it becomes very valuable to understand how the entire financial statements preparation works out at the consolidated level, whether in India being a holding company, the consolidation will work out in India level. And if India is a subsidiary, what are the implications if the in Australia the company is holding company and being a consolidated work? Today's session is more focusing on the accounting aspects. However, I believe that accounting is a fundamental principle in order to undertake all the other implications from the tax and regulatory front as well. So, a very warm welcome to all of you for this today's session. I hope you will get a lot of insights. You will get a lot of opportunities to understand how the financial statements preparation works in Australia. And I would like to introduce today's speaker. So we have joining us with Mr. Shailesh Kulkarni. He's from Pune. He works in the assurance services practice area. He has worked majorly in the leading and managing statutory and external audits of listed companies, very large unlisted and MNC groups, uh, private clients across India, Oman, and Australia. So, the perfect person for today's session, I would say. And he has an industry exposure which includes clients servicing in multiple sectors, which are manufacturing, service, telecommunication, media, and technology, oil and gas, construction, education, and childcare and fund industries. So I think across the entire sectors, he has worked in the statutory and external audit arena. He also has the exposure and worked on the external audits of listed and unlisted entities in USA. He was involved in multiple preferred stock and debt accounting advisory aspects for selective clients in the US. He has led the IFRS implementation for the clients representing varying industries, including manufacturing, service, construction, oil and gas, and poultry in Oman. He has led and is currently leading the audit quality matters within his existing firm, where he has worked since 3 years now. So he has worked extensively for the IPO clients as well, who have been representing childcare industry in Australia. So a very warm welcome to Shailesh Kulkarni, and I will hand over to the Shailesh sir to start with the session. I hope that the session is audible to all of you. If not, kindly put your questions and queries in the chat box. I would also request at the end of the session that any questions you have in during the session, please post it in the Q&A, and we will take it at the end of the session. If something comes up in between, I will definitely have those questions also been placed in between the session. However, please do not hesitate to ask so many questions, whatever you have during the course of the session. So all the very best, Shailesh sir. Over to you.
Thank you, Rutuja. Good afternoon, everyone. It was very overwhelming to listen your own profile from Rutuja, and we never thought of retrospecting our own profile at what we have done since last 13, 14 years. But yeah, so before jumping into the core subject matter, that how financial statements are prepared or what are the key considerations in it, or a business activity statement, it is very imperative from us to understand what are the ground rules, right? So Australia being a different nation, different legislation, it is very much important for us to understand how things work there. What are the critical elements you need to consider before taking up any assignment which includes financial statement preparation or lodgement of business activity statements. So we'll quickly run through some of these ground rules, some of the key considerations before jumping into the main subject matter for the day. So we'll be touching base on Australian accounting outsourcing landscape, the accounting software which is exhaustively being used in Australia, then communication ethics and performance metrics which are very important, and then we'll touch base on financial statements and business activity statement as a core subject for today. So we all know what is accounting outsourcing is delegation of accounting and compliance work to offshore teams. Offshore teams work very extensively for Australian firms. Focus on quality accuracy and timeline is very important when you are working on overseas assignments because the professionals or expectations from clients in Australia, US, or UK for that matter are pretty much stringent. You have to be on toes in terms of your quality, your deliverables, the accuracy, and the timelines in which you are required to submit your deliverables. Then why India? Why Australian firms outsource to India? Australia increasingly relies on offshore teams to act as a seamless extension of their professional and ICI members. This represents a shift from simple data entry to a high-level professional accounting. And why Australian firms outsource to India? Primarily, we are well qualified professionals. We have strong accounting and ethical background because considering a code of ethics which governs our day-to-day operations and our style of working, we are ethically pretty much recognized across globe. And one important aspect is cost efficiency and time zone advantage. Outsourcing involves delegating accounting and compliance tasks to different offshore teams with a heavy focus on quality and accuracy. And again, the India advantage is we are ICI qualified professionals and we have ethically pretty much correct, and our technical competencies are recognized worldwide. So that helps all these overseas countries like all these US, UK, and Australian countries to send the work to India. Then Australian regulatory environment is also important to touch base before you take up any assignment from Australia. So Australian accounting standard boards. Those govern the Australian accounting standards. And based on my experience working on Australian clients, those are 100% aligned with IFRS. So at least in India, we have some carve out provisions in some of the indices, but in Australia, they follow IFRS. So tier one financial statements, which are applicable to all listed entities in Australia, those are like 100% compliant with IFRS. So that's how accounting standards are worked and interpreted in Australia. Then ATO is Australian Taxation Office, which governs tax, GST, and business activity statement matters. And ASIC is corporate reporting and governance mechanism. So the way SEBI and MCA works in India. So in Australia, you have ASIC, which governs the overall corporate reporting and governance framework. If you ask me about accounting software, so there are multiple accounting softwares being used in Australia. So one is Xero, Mayo, QuickBooks, but Xero is significantly used accounting software. So 90% use case scenario, you will find a lot of accounts are being maintained in Xero in Australia. So I specifically mentioned about Xero here. So it is basically a cloud-based accounting software widely used by Australian SMEs, and it enables real-time collaboration. So it has fantastic facilities for accounting teams and even reviewers to review the kind of reports being generated by the system are awesome. It also gives ready-made output for entities to lodge business activity statements. And basically, the coding which is done in the Zero is in line with Australian accounting standards. So that definitely reduces the time for professionals to again decode everything and do some reclassifications which are in line with the Australian accounting standards. So Zero is having wide case usage in Australia. Again, what are the role of professionals when you are dealing with Zero? The main purpose of I am explaining this is when you will get some assignments for business activity statement reviews and lodgements and financial statement preparations. 90% cases you are going to get access to the Zero, because in Zero you can give an access to an individual professional then who can start reviewing and extracting the information and preparing the financial statements in Excel with all the relevant disclosures and everything. So it is important for us to understand the key logics and assumptions and role of us, the professionals in Zero. So accounting logic, not data entry, focus on professional judgment and accounting principles rather than simple data input tasks. So although Zero has that functionality of recording everything, you have to use your logic that whether classifications are being done correctly in that. Then review of coding and reconciliations. So ensure accurate reconciliations and verification of all financial transactions. So we know like trial balance is list of transactions occurred during the year. And whenever a particular GL or general ledger is created in any ERP, it is very important for us to see whether that GL is classified in terms of financial statements. So if it is an expense ledger, whether it is appropriately classified in that respective expense head. So that's something is you need to use your professional judgment, your knowledge, and your kind of common sense in doing that. So review of coding and reconciliations is on us, supporting audit ready financials. So as I told, Zero has by default coding which is in line with Australian accounting standards. So it definitely supports audit ready financials. And it is for us also to ensure that appropriate documentation and accuracy standards are being met while you are making financials from the output from Zero. Key judgment areas in Zero, revenue and expense classification. So proper categorization of income and expenditure according to accounting standards is pretty much important here, because system may not understand itself that way whether that account of revenue or expense should go. So for example, if I have done an audit in Zero or I have maintained financial information in Zero for say FY 24, 24-25, and in 25-26 I have some new ledgers coming in the picture. So how to classify them? It is on me that whether it should go to expense, proper expense head or not, whether it is going in proper revenue head or not. It is our responsibility to check. So it is a judgment, it is considered as a judgmental area. Then accruals and prepayments. Accurate timing recognition of revenues and expenses across accounting periods is also important. Then whether proper GST treatment is given. So in Australia, if you compare with India, the GST legislation is a little bit simpler. So now also in India with GST reforms last year, there has been refinement in the rates. But in Australia, from the beginning, they had only 10% as a GST rate on some items or a nil GST rate. So it is quite simpler, but there are certain categorizations where some items of expenses are GST free. So whether you're properly applying those GST rules while recording the transactions or while reviewing the transactions before making financials, are those GST rules have been appropriately and adequately applied? That is also something we need to see. And fixed assets and depreciation also we need to see, because that is also one of the critical areas where although Zero supports, we need to be careful in doing that. One more thing I want to like specifically mention here, like for small businesses in Australia, they allow cash basis of accounting. Okay, so you need to meet certain threshold criterias. So your aggregate revenue is less than say 10 million hypothetically. So those entities are called as small businesses and they're allowed to do cash accounting in their Zero. So in that scenario, when you are reviewing or making financials, you need to ensure that in Zero you are taking that cash accounting approach adequately. because Zero provides both cash and accrual accounting scenarios. So you need to properly select that cash accounting scenario. Further, for all these small businesses, if there are any personal expenses of entrepreneurs or owners of those businesses, so that reclassification you should do properly, because it may happen that the personal expenses of all these promoters or all these owners may get accounted in your business. So that kind of classification alertness you need to show while you are working on and reviewing Zero. Then this is also one of the very critical parameter when you are working on any overseas assignment is the communication expectations. So your communication has to be very clear and concise. Then you need to give timely responses, and there has to be proper documentation of whatever work you performed. So many times what happens is, or generally what has been experienced is, we do write very good emails. Indian chartered accountants or Indian professionals are very good in writing emails, but they do struggle in having one-to-one communication with overseas counterparts. So then there the communication gaps start coming up, and then that creates some hassles in completing the assignments in given timelines or with given expectations. So it is imperative for us to develop that skill of communication and have that proper training to your respective managers or staff members who are going to work on these assignments, that they should be very much clear on the communications, because unless you are communicating properly, the recipient will not understand what you are trying to say, and then it unnecessarily creates hassles. So this has been experienced by all Australian counterparts or US counterparts in their general experience sharings. Uh, then coming back to ethics in outsourcing. So in Australia specifically, if I talk about, they give a lot of priority on confidentiality of data. So it is very important for us to maintain confidentiality when you're working on Australian clients. One more input I want to provide here is that it is mandatory for us, or it is mandatory to have the data stored on Australian server when you are working on any Australian job. So they are very sensitive to the data. So confidentiality of data is pretty much important. Independence and objectivity. You have to be very professional, unbiased in the way you are working. You have to use your professional skepticism throughout your assignment, and you will take full responsibility for the work which you are going to deliver. So responsibility includes qualitative deliverables and timely deliverables and with full accuracy. So that is something is expected when you are working on Australian jobs. Whether you're working in India as an offshore consultant or an outsourcing agency, or you're working in Australia itself, these parameters are pretty much important, and those kind of work as a performance matrix. So communication, clear and concise communication, timely follow-ups, detailed documentation of whatever you do. So again, why documentation in Australia or in US or in UK? Documentation plays a very critical role. All these documentation standards are governed by international standards of auditing, and those have been rigorously followed in these countries. So your detailed documentation is very important. Then ethics, strict data confidentiality is pretty much important. You have to use your professional judgments, professional skepticism, and you have to be objective and independent. Performance metrics, as I already said, low error rate is what is expected. Quick turnaround time is expected, and review readiness. So you have to be on toes with the timelines which they have been communicating to you, what you have been agreeing with them at the beginning, and ensure that you are following all these specific parameters. Financial statement preparation, I will quickly touch base on that. We'll have a detailed slides like subsequently. So financial statement preparation, again, it's we have been preparing financials, we have been auditing financial statements from our standard 11th or 12th of commerce, right? So we know what are the critical assumptions or critical tasks you need to do while you are doing financial statement preparation. So trial balance has to be clean. You have to use consistent accounting policies. There are judgments in estimates and provisions. And you have supporting working papers for certain disclosures in the financial statements. So it is nothing new we are going to learn here. All these are basic things which are expected. This is how, and all these are followed. So whether you prepare financial statement in Australia, whether you prepare financial statement in India, whether you prepare financial statement any country in the world for that sake, you have to use all these fundamental accounting principles. So once you are clear with those, I think you can make financial statement in any country. You can audit financial statement in any country. It's not a big task. Business activity statement. So basically, to give you a very simple example of what business activity statement for the members who may not have come across with business activity statement in Australia, it is nothing but a GST return which you file in India. It is parallel to that. You can compare that with this. So it is basically GST reconciliation with ledger, but it also includes TDS deducted on salaried employees. So they called it PAYG. So PAYG is nothing but tax deducted on some of the salaried employees in the enterprise for which you are doing this work. So in the BAS statement, business activity statement, so there are three kind of timelines which are given. One is annual, one is monthly, and one is quarterly. So we'll go through with those, but it is basically to report and pay GST liability and pay PAYG liability. And if the enterprise is profit making and there are tax liability coming up, you need to pay tax also through business activity statement. So it is basically a summary of all these three, four elements which you need to file. Again, regulatory framework is also important when you are talking about making financial statements in Australia. So primary legislation is Corporations Act 2001, which governs financial reporting for companies, same like Ministry of Company Affairs and our Companies Act. Then a new GST system. So GST system is nothing but filing business activity statements. Standards, Australian Accounting Standard Board have issued accounting standards in Australia, which are compliant with IFRS. ATO is Australian Taxation Office, which manages tax reporting and business activity statements. And ASIC is Australian Securities and Investment Commission. So basically, in India, you have Ministry of Company Affairs and SEBI, right? So SEBI primarily looks after or regulates listed companies, company-related compliance and regulatory proceedings. So in Australia, you have ASIC, which takes care of all listed and non-listed entities. So there's no separate entity to take care of listed entities in Australia. It's basically ASIC, which looks after listed and unlisted entities in Australia. So preparation of financial statements primarily involves, same we know, these are big three statements. Statement of financial position, which is balance sheet, statement of profit and loss, statement of cash flows, and in some cases, statement of changes in equity and notes to accounts. So these are the four components in financial statements. Similar to India, we have similar components of financial statements. Australia also has same financial statement components. Again, as I was telling you, some entities, small business units can use cash basis of accounting. So if an aggregated revenue is below $10 million and GST turnover is less than 2 million, they can use cash accounting as their system for preparing financial statements. So when a company is preparing financial statements, these four components you need to take care of. Reporting entities and tiers now. Now, when you talk about financial statements, in Australia, they have bifurcated the financial statements in three categories: Tier 1 financial statements, Tier 2 financial statements, and special purpose financial statements. So, Tier 1 financial statements are basically general purpose financial statements, full SSB compliance. So, SSB is nothing but Australian Accounting Standard compliance, and these are required for public accountable entities. So in India, the name we use is PIEs, right? Public interest entities. So in Australia, same concept, the word is public accountable entities. So they call this as a PAEs. So public accountable entities, these are nothing but listed companies and some government entities where public involvement or where public accountability is involved. So those are required to prepare tier 1 financial statements. So these are general purpose financial statements, tier 1. Now, tier 2 financial statements, these are required for large proprietary companies, not for profit entities, and many public sector companies which do not have public accountability. So the difference between tier 1 and tier 2 is simplified disclosures. So even though you are complying with Australian accounting standards, there is a Australian accounting standard 1060, which specifically governs disclosure requirements in tier 2 financial statements. So these are nothing but little shorter version of full scope financial statements, which are tier 1 financial statements. So they have reduced certain disclosure requirements for tier 2 entities, considering those are not exposed to significant risk and where public is not involved. So they have reduced the disclosure requirements, and special purpose financial statements are available for entities without public accountability and that are exempt from law to prepare general purpose financial statements. So those are like special cases, but generally you will see tier 1 and tier 2 financial statements being prepared in Australia. Just gross differences between these. So tier 1, tier 2, and special purpose. So if you see target users, so tier 1, general public, tier 2 also general public, but non-public accountable entities, and special purpose are specific users. Then R&M is nothing but recognition and measurement. So to fit in this slide, I have used certain short forms here. So R&M is nothing but recognition and measurement. So here in tier 1, you have to be fully compliant with AASB. In general purpose financial statements for tier 2 also, you need to be compliant with AASB. Only their disclosures are governed by AASB 1060. But otherwise, you have to comply with full accounting standards. And special purpose is selective disclosures, full IFRS, because if you see the wording in Australian parlance, so as I told earlier also, tier 1 financial statements, they comply with full Australian accounting standards, and all these accounting standards are nothing but replica of international financial reporting standards. So they also mention that tier 1 financial statements have to be compliant with full IFRS, which is nothing but AASB's 100% compliant with IFRS. Then tier 2 financial statements are reduced disclosures, which are governed by AASB 1060, and special purpose is minimal disclosure. So even in India also, when you prepare any special purpose financial statements for any reason, those are like having very limited disclosures, right? So whatever is coming as a headers in your P&L balance sheet, those only you give some kind of schedules, some kind of explanatory information, but you never prepare a full scope financial statement as special purpose financial statement in many cases. Consolidation is mandatory for both tier 1, tier 2. Only it is optional for special purpose, because special purpose is prepared only for specific reason. Audit is mandatory for tier 1 companies using preparing their financials under tier 1. Tier 2, there are some exceptions given. And special purpose also, it depends whether you need audited or management approved. It depends on the use case scenario. So this is how the difference in tier 1, tier 2, and special purpose financial statement works. So if you have any questions, no, you can put them in the chat box and we can take it up at flag end of the session. Primary difference, if you want to go a little deeper in the what are the major differences in tier 1 and tier 2 financial statement disclosures. So tier 1 allows full AASB standards. Tier 2 disclosures are solely found in AASB 1060. So basically difference is in disclosures. Reduced content, tier 2 entities are exempt from many detailed disclosures required in tier 1. So just to give an example, you may not show disaggregation of revenues or detailed fair value disclosures or movements in liabilities, opening and closing balances. So those kind of disclosures which are mandatory in tier 1, generally you are not required those kind of disclosures when you are doing an audit of for preparing financial statements of tier 2 entities. So there is good kind of exemption given under AASB 1060. Then statement of cash flow is also simpler in terms of tier 2 financials. In tier 1, there is a detailed disclosure given in the AASBs, which you need to follow. AASB 1060 has shortened that disclosure requirement and made it more simplified. Statement of changes in equity tier 2 may, in some scenarios, present a combined statement of income, expense, and retained earnings rather than a full statement of changes in equity. Even though this exemption is given in AASB 1060, but many companies in Australia show statement of changes in equity separately just to present the income, expenses, and changes in equity which is understandable to the users of financial statements. So it gives proper flow and it is understandable to the users of financial statements. Public accountability, tier one is mandatory for public accountable entities, while tier two is for private entities that do not have public accountability. So, grossly speaking, listed companies follow tier one financial statements, and unlisted companies where public involvement is not there, public accountability is not there, those follow tier two financial statements. Uh, I'll just give some samples of uh, tier one financial statements. Let me see if I can open this in the presentation mode, or I can share you or share that tier one financial statements. Just give me one sec. Yeah. So again, this document is prescribed by Australian government Department of Finance. Uh, So if you see the number of pages these financials are running through are almost 100 plus pages. So they are given a proper explanation and classification and disclosures what you need to give in tier one financial statements. So full details of expenses, sources of income, what is a gain, loss, which is coming in the financials, then details of other comprehensive income, uh, taxation liabilities and charges. Then balance sheet starting with assets. You have financial assets and non-financial assets. So basically in Australia, there is a categorization into financial assets and non-financial assets. So basically it is in line with IFRS. So if most of you have worked on IFRS financial statements have or gone through the financial statements ever, you would definitely able to understand this that this is same format of IFRS financial statements. Liabilities again, you have payables, then you have interest bearing liabilities, then you have provisions, then you have total liabilities, and then you have net assets. So that's how the financial statements or the balance sheet is being presented in Australian parlance. Statement of changes in equity, you have contributed equity, then you have comprehensive income details coming through. Then there are distribution to owners and contribution by owners. So then you have retained earnings. So basically, this distribution to owners and contribution by owners is pretty much common in Australia. You have a lot of such kind of scenarios happen and experienced where you will have some kind of information populated when you are doing or working on any of the financials in Australia. Then have retained earnings, which has comprehensive income movement again, asset revaluation reserve. So if you really see, it is nothing too much different than the way we prepare our financial statements in Indian parlance. Obviously, you need to factor in the IFRS way of disclosures and presentation of these financial statements. But yeah, these are the formats given by AASBs and which are notified by Australian government as well. Cash flow statements are there, very detailed cash flow statement, which are in line with AASBs. So all these, and then you have all the footnotes coming through in your, like for example, an administrative schedule of comprehensive income. So that is also given separately in a very detailed way. So all the detailed schedules are forming part of your main balance sheet P&L, which is nothing but tier one financial statements. So that's how you generally prepare tier one financial statements. You have the formats prescribed by Australian government. Then all these financial performances are there. So these are the headings which are being used. So these are the standard formats you need to use, and these are publicly available. Like you can download them from the Australian websites, and you can use those. So whenever you get an assignment to prepare a financial statement from Australian parlance, so always have these formats ready with you, and always compare the like if you are doing the assignment for the first time, always have like a review of what is the standard given and how you gonna implement that standard. So that is also very important to always have a review of according to standard what is expected, and whether the financial statements you are working on are meeting those standard formats. Moving to certain key financial reporting updates. In Australia, sustainability and climate reporting has also become mandatory now. So in that scenario, what has been given as a guidance is there are double SBs S1 and S2. These are nothing but again copy paste of IFRS standards. So there are S1 and S2 standards which has been issued in Australia. So S1 and S2s are applicable from 1st January 2025. So S1 is nothing but the voluntary standard which prescribes what are the general requirements of disclosures for sustainability and climate related reportings, and S2 are mandatory standards. So mandatory standards give you guidance on how exactly you need to report, what are the risks relating to climate reporting and sustainability reporting, and what are the disclosure requirements, and how you should report and how should evaluate the impact of those sustainability and climate related risks in the financial statements of the company. So again, you must be aware that there are two kinds of assurances given for sustainability reporting. So the members who are involved or have started working on BRSR reporting, you must be aware that there are basically limited assurance and there is a reasonable assurance. So there are these two kind of assurances which are given in India right now. So in India from 23-24 itself, the top 150 listed companies are required to give reasonable assurance on their sustainability reporting, right? So in Australia, right now there is a limited assurance. The reasonable assurance is applicable from 1st July 2030. So that is something they have defined that we will have climate related disclosures and reasonable assurance reporting on that from 1st July 2030. Uh, Again, if you really see the reporting requirements in S2, the SSB S2, those are more or less compliant with IFRS again or ISAs. So basically, whatever IFRS is requiring you to disclose under S2 standard of IFRS, same is applicable. And even in Indian parlance, similar reporting is required. So it is nothing something pretty much new for you if you are really working on any Indian client which has that sustainability or climate reporting. To apply same principles, you can easily ensure whether proper disclosures of sustainability and climate related reporting has been made in the Australian financial statements, or if you have been asked by the client to uh, provide those disclosures as a part of your outsourcing activity. You can definitely refer to those. Those are very well drafted and very well articulated standards. You can definitely use the logics and the guidances from that standards and ensure you are preparing and putting those disclosures properly in your financial statements. Then in Australia, they have a separate statement called Consolidated Entity Disclosure Statement. So this has become applicable in Australia from 30th June 2024. So again, this is not a part of your full scope financial statements, but it is a separate statements which public entities have to file with ASIC. So this consolidated equity disclosure statement is basically it requires you to provide all the details of the subsidiaries within the group. So if it is a group, you need to provide those specific disclosures. So in India, in India's you in your financial statements, you give a proper disclosure of subsidiaries. That what kind of subsidiaries you have in the group, what is their country of residence of those subsidiaries, then what's the net asset value of the subsidiary at a standalone basis. So all those information we give in the financial statement, India's financial statements. But here there is a separate statement which requires you to give details of subsidiary companies. And along with all the information which we give in Indian parlance, you will also need to give what is the tax residency. So many times what happens is your subsidiary or your group may have subsidiaries representing different geographical jurisdictions, which may be outside Australia. So then what is the tax residency applicable in those respective legislatives have to be brought in and reported under this consolidated entity disclosure statement. Now there is an exemption in Australian parlance. So if an entity is an investment entity, according to the definition of SSB 10, So AASB 10 is nothing but the standard governing consolidated financial statements. So if in AASB 10, if your entity complies and meets the definition of investment entity, then you are exempted for giving this consolidated entities disclosure statement. So that one exemption has been provided by AASBs. So basically, what is the definition of investment entity? Is an entity which is primarily formed to make an investment of funds which has been raised through share capital, and you get your primary business is to expect returns on that investment. So primarily, there is no business activity involved. The only activity is expecting return on those investment, maybe a dividend, maybe an interest. And so those meet generally a definition of investment entity under AASB 10. Okay. And whenever you make financial statements or you audit financial statements as a part of outsourcing team, you need to be aware of what are the ASIC focus areas. So as I said, in India, you have SEBI and MCA. ASIC is the legislative authority which governs the reporting and regulatory frameworks in Australia. So generally, ASIC expects and, if required, investigates certain key or high risk areas. So to just give name, uh, asset impairments, revenue recognition, then operating and financial review risk disclosures. So those are like kind of key focus areas ASIC looks after whenever company makes filing. So primarily when a public company makes filing. So ASIC reviews whether all these required and high risk areas have been properly and adequately considered and reported and disclosed in the financial statements of an entity. So we know revenue recognition even in India, as per our standards on auditing, SA 240, it is presumed fraud risk, right? So this is not only in standards on auditing, it is also in ISA, International Standards on Auditing, that revenue is a presumed fraud risk. So that's why revenue recognition for an entity which is a revenue generating, profit making entity, revenue recognition becomes a key risk area. And therefore, the focus is on revenues, then asset impairment, definitely being considered as a key focus area in Australian parlance as well. So whenever in your financial statements, you find like there are revenues, asset impairments being informed by your clients, then you have to give proper emphasis, spend more time, have detailed review of all these critical aspects. So whenever you are making financial statements, you will then ensure proper disclosures are being met. So these are very critical areas whenever you are making financial statements. Moving forward, we'll touch base on business activity statements. So, as I briefly touch base, what are the business activity statements? It's the purpose of those business activity statement is a single form used by businesses to report and pay various tax obligations to the ATO, right? So that's the main purpose of business activity statement. So what are the various tax obligations? So one tax obligation is your GST, another tax obligation is your PAYG, which is nothing but TDS deducted on salaries paid to the employees, and your income tax. So if an entity earns profit and there is a tax liability as per Australian taxation laws, so you need to anticipate that tax liability, what could be my tax liability for the year end, and then you need to make a proportionate payment of tax in Australia while you are making business activity statement. Okay, so who must lodge? Any businesses registered for goods and services tax ideally is required to pay business activity statement. So you need to lodge business activity statement if you are registered with GST. Okay. Then what are the critical labels which are being used in business activity statement? I'll definitely share a format with you in maybe next slide. So it is G1 is total sales. So basically simple thing. You are collecting GST on sales. You are paying GST on purchases. So you will have a net position, right? So you might have collected 100 rupees as GST on sales. Must have paid 50 rupees as GST on purchases. So 50 rupees will be liability which you need to deposit to the credit of government. The same logic works here. You have G1 total sales, 1A GST on sales, 1B GST on purchases. Uh, Then again, what are the critical elements? Same thing. Percentage GST, mainly in Australia, you have 10% as a tax rate on most of goods and services. It's quite simpler form of reporting. Then you have PAYG withholding, the tax withheld from employees. Then you will have some PAYG installments if you have gone for some composition scheme where sometimes if the businesses are not able to pay liabilities on time, they can opt for installment payments. So they can do that. And what are the other components? So there may be fringe benefit tax installments. In certain entities, wherever applicable, there is a wine equalization tax, luxury car tax, and fuel tax credits. So fuel tax credits are primarily the entrepreneurs or businesses who are running transportation business, and the vehicles which are being used in the business are heavy vehicles. So there is a scheme launched by government where they are giving some subsidy to those operators. They give a fuel tax credit. So whatever fuel expenses you have incurred during a quarter, so there is a mathematical formula through which you can claim some credit on whatever fuel expense you incurred. This is applicable only for specific businesses who are dealing in transportation services, and that too on if the vehicle is heavy vehicle which is being used, and all those vehicles which is a heavy vehicle, what is the CC you need to consider is already defined in the rules. Even if you just Google fuel tax credit applicability in Australia, you can get a government document which enlists what are the preconditions where you will be eligible to claim fuel tax credits. So all these elements you can put in the business activity statement and claim the credit of it. So I'll just give you one sample example of one of the business activity statements filed. This particular example I'm giving for a very small business entrepreneur who is following cash basis of accounting. So G1 is nothing but total sales. So total sales were 117, sorry, 117,000. Then you have PAYG withholding details. So these were the PAYG. So these are nothing but TDS deducted on salaries paid to certain employees. Then you have amounts you owe to the tax office. So what we owe to the tax office is GST, which we collected on selling the goods and providing the services. So in this given case, the services provided by this entity are GST exempt. So therefore, there is no GST collected on sales. Then this is PAYG withheld 9,480. So total salary payment was 64,000 and amount withheld from salaries were 9,480. So this 9,480 is nothing but TDS which you need to deposit to the credit of government. And then you have availed and paid GST on certain purchases. So 3,747 is the amount which you paid on purchases, which you can claim from the government, as this is total owed by the ATO. So in eventually or in the net, there was a payment required to be made of 9,480 and there was a credit available of 3,747. So you have an exposure of $5,733, which you need to pay to the credit of ATO. So this is a payment you need to make to the ATO once you file the business activity statement. Then what are the reporting cycles and due dates for making business activity statement lodgements? So if your turnover is more than 20 millions, you need to do monthly lodgement and due date is 21st of the following month. If your turnover is less than $20 million, you need to do quarterly lodgements and due dates are 28th of a subsequent month after the quarter. So if my quarter is ended, say at September, then 20th of October is my lodgement date. And respectively for each quarter, the date will go. Now, again, here in Australia, the financial year is generally 1st July, starts on 1st July and ends on 30th June. So 1st July to 30th June is the financial year followed in Australia. So you have to take that always in consideration, because what happens is if you are doing an Indian practice and if you also end up having any overseas work and that is too from Australia, so then there is always a confusion in early stages that whether it is quarter 1 for India, whether it is quarter 2 for Australia, or whether it's quarter 3 in Australia. So what happens is April to June is our quarter 1, but in Australia it is quarter 4. So those kind of it may create some confusion in your early stages of executing a new assignment or your first time doing any Australian work. Just be careful on that. Always have this kind of the scenarios or guidances printed and having placed in front of you, so that you can easily look at them and always reiterate that yes, I know this is the quarter end, this is the date we need to follow, because these dates are very important. And wherever there is an annual filing where turnover is very low, like less than $75,000 in a year, you can file an annual the business activity statement on 31st of October. So in Australia, when year ends at 30th June, by 31st of October, you need to complete your tax filings. So your income tax return has to go before 31st of October. And alongside that, you also need to file business activity statement. So, uh, and again, what happens is you also need to reconcile whatever you are submitting or lodging in business activity statement is finally is again reconciling with your tax returns. It should not happen. There is a huge mismatches between those two. So that's why it is very important that you follow these timelines properly and do your reviews and lodgements correctly. What are the best practices for preparation of these business activity statements? So it is very important that you do reconciliations. Okay, so always reconcile your business activity statement figures against your profit and loss and balance sheet before submission. So what happens is in zero, when you work in zero, so whatever extract I shown you, that extract. So basically going back to this extract, is it extract from zero only. So zero gives this functionality where you can extract and populate this business activity statement. It automatically fetches the numbers in respective fields, and then you can use that and lodge it. But again, as a professional, it is always better to have your own reconciliation again before you lodge it. So always have a review of whether your total sales as per activity statement is matching, just to ensure there are no IT related issues or bugs in the zero, which is giving wrong population in business activity statement. Because technology may sometimes give a very wrong picture. You never know if there are any bugs in the system. So as a practice, as a good practice or best practice, always have reconciliations in place. Always reconcile all the numbers which are there in business activity statement with the underlying records. Then record keeping, Australian law requires records to be kept for 5 years for tax purposes and 7 years for corporate records. So whenever you're lodging business activity statements, so you should always have your underlying records maintained for at least 5 years for tax purpose. I would recommend to keep it for 7 years because it won't harm, but it will always give more assurity and more control and more comfort as an individual professional to us. We'll always have that as a good basis of justifying our stands and positions. So always have your records properly kept. Automation, again, utilize accounting software. So rather than so it's a very rare scenario, but it is worthwhile to mention for if you are doing any activity for a very, very small business, maybe a startup in Australia, who may not have gone for any software like Zero Myob, which is not providing you facility to prepare business activity statement automatically through the underlying records, then you will have to do it manually, right? In Excel. So always be careful and suggest your clients to go for an automation rather than having it manually. And a review. Double check GST free input related tax sales or what kind of services are GST exempt. So, for example, if you are making any government payment, so if you are paying any water charges to any Australian government agency, so those are generally GST exempt. You don't pay GST on that. But if your coding is wrong in the zero itself, where you accidentally or erroneously or with oversight has recorded that particular expense as an expense with GST, then at the time of scrutiny, then you may end up paying unnecessarily interest or penalty for excess claiming or erroneous claiming of credit, GST credit. So be careful, have a look at GST laws and regulations. Everything is available. They have made it very public, everything, that what are the commodities on which, what is the GST rate applicable, what are the commodities which are GST free. So just ensure your coding in whatever accounting software being used by your client. Just ensure that those specific codings have taken care of all these adjustments. Now, if you end up in a situation where you find out something is wrong, say initial coding is wrong, but you are not authorized to make any changes, so you can always pass a journal entry in the zero, and you can always rectify those errors. It is always advisable to rectify the coding itself if you come across with any error. But if you are struggling on timelines and you really need to file business activity statement, many times it happens in India also, we experience that client comes at a very last stage, that no, tomorrow is due date and I want to do it today itself, and I was very busy in some other tasks, so please help me out in lodging this return. And then in that scenario, rather than changing your base records, you end up doing some rectification entries. You pass them out as a audit journal entries, or journal entries to keep your records presentable and accurate. So those kind of things also you do in Australia. You also get an experience of similar scenarios in Australia, although the instances are lesser than India. But you do have similar scenarios where client will come at a last stage and request you to lodge. But remember these critical things. You can always have an SOP for business activity statement. So I have one SOP which is a generic SOP, which if you are doing any such kind of scenarios where you are lodging business activity statements, you can always have at your hand. It should be handy with you. I'll just share one of the SOPs with you, that how we can do that. I'll just share it with you. Just give me a sec. Okay, so believing my screen is visible, generally you can always review your business activity statements before lodgement. That it is again basically based on zero, because again, given 90% use case scenarios in Australia is zero, I have considered it worthwhile to put zero as an example for you to explain and walk you through on how the business activity statement review you can do in zero. So always start with bank reconciliation, see whether your bank accounts are appropriately reconciled, because if your bank reconciliation is not complete, then it implies your accounting is not complete, right? So if you have open bank reco item, open reconciliation item, so you need to ensure that you are reconciling those bank reconciliations. You can ask clients to reconcile that if you observe that bank reconciliations are not complete. Okay, so this is very much important that you do a bank reconciliation. Then following down, always have a ledger scrutiny. So always have open general ledger detail report. So zero has a lot of functionality. So that's why there's a 90% use case scenario in Australia for zero. That you get a lot of reports. So general ledger detail report, which lists down each transaction under each ledger head. So you can use that. Use account transaction report for specific GL account. So if you need a specific GL account, you can check that. Then in that GL scrutiny, just see whether GST has been properly accounted for, whether classification is appropriately done. Always refer to the previous quarters, that whether a particular item of expense is consistently coming in each quarter. Ask those questions if you find some mismatches. So do some kind of reviews. So assume you're doing an audit of a financial statement, and while auditing, you may come across with certain scenarios where you will see, oh, there is what generally we do for if we are doing an audit of a small entity. What we do is generally a analytical review procedures, right? We see what are the trends. So say last year amount was 100, this year it is 110. So 10% increase. So what has led to that 10% increase? If amount is 15 any expense and this year it is 49. So we said it is not materially moved. So it appears that expenses are consistently recorded in the books. So those kind of insights we get when we do a review. So always do a quarter on quarter review of all the ledgers. That will give some insight if something has not done correctly or if there is an exceptional transaction. So it may happen that initially when you start your outsourcing journey, you may get some small entities to work on initially, because even Australian counterparts will try and test whether whatever work they are planning to give you is you are able to deliver on that or not. So for that, from that perspective, they will start giving you some small work. We would have also done similar way, right? If we want to involve any third party in doing our tasks, we would have tested them with some small tasks. So they will give you some small business entities to review, to lodge business activity statements, or to help them reviewing business activity statement and giving comfort on those, and then though later on they can lodge it with Australian Taxation Office. So in those small entities, what happens is many times a personal expense is getting recorded in the business expense. So you should able to catch hold of that, because business owner may not himself tell you this, because he would definitely want to claim more GST credit in his financials, but you always have that skepticism going on. Although you may be doing some consulting kind of work where you are not auditors of that entity, but always have your professional skepticism. So have that review properly, see whether proper GST rates have been used. So for example, insurance. In insurance, insurance entries have correct GST, usually 7%. So what happens is, just to give you a proper explanation of this, if the insurance expense is 100, so what happens is you considered 70% of that expense for GST, and 30% of that expense will be GST free. So you will have 7% of tax rate that way. So have that kind of rule set in your mind. Have these SOPs written, keep those with you. Always ask your team members, if you are going to hand over and delegate your work to your team members, that always refer to these SOPs before you do your review. So whenever there is a review comes, there is a checklist or this SOP, you can convert this into a checklist form in Excel and ask them to take off what they are doing. Then validate supplier or GST claims via ABN lookup. So this is also a very important aspect. There is a facility called ABN lookup, which is online available. You don't need to have any login for that, publicly available information. So ABN is Australian Businesses Registration Number. Okay. So the way we get a CIN number from MCA, right, for a individual company registered, you get ABN number from Australian perspective, where you can identify that company with that particular ABN. So when you are reviewing the business activity statement, or even for that matter, financial statement preparation, and you come to know that a GL is having a GST on GST credit for, say, services provided by person A. So whether that person A is registered for GST or not, it is very important for us to check. So for those entities, you can always check ABN lookup. So when you do an ABN lookup, you get to know the details of whether that person is GST registered or not. So from which effect his registration is active. It may happen that you are reviewing the business activity statement, or for that matter, financial statements for the quarter ended, say, December 2025. Okay. So this is the second quarter in Australia. And during that quarter, you noted that services from person A were availed and there was no GST claimed. Now you are doing a review of March quarter, okay? And you reviewed and you checked, and you saw that again, person A, services from person A has been availed. Again, no GST is claimed. But it is very important to check whether in this quarter or in last 3 months, if he has went and obtained GST registration, if whether he is registered for GST. So you go and check on ABN lookup whether he has been registered on GST. And it may happen you may find him registered for GST and accountant of the company has failed to claim credit, because he was also gone in the same presumption that he is not registered. Mr. A is not registered. I checked in previous quarter, he was not registered. So I presumed that he is not registered in this quarter also. So these are very important things you need to keep in mind while making financials, or you are reviewing business activity statements, or you are lodging business activity statements, okay, for Australian clients. Then uh, uh, match fuel expenses to petrol stations using vendor names. So these are kind of certain reviews which you can always do with some underlying documentations. So earlier there was a provision of assets under $20,000 may qualify for instant write-offs. But I think according to my understanding, this provision has been waived off now. So I will not touch base more on that. Then balance sheet review alongside P&L, always have a balance sheet review. So again, this is very important, that ATO integrated client account with ATO payable account. So basically, what happens once you file business activity statement? So you can always extract what is the statement, what is the position with ATO that your client has. So for example, I have filed the business activity statement say for December quarter. Okay, now it's January 26, so December quarter must have been in the phase of finalizations for many of Australian clients. So there is a December quarter. We are going to file business activity statement for December quarter. You have filed for September quarter, and say there was a liability of 100, okay, on the GST front. And a client has not paid that liability yet. It may happen that client have forgot to pay that, or he has deliberately postponed the payment, or there may be some cash flow issues. So these are more practical and pragmatic scenarios. So once you identify 100 as a payable in your accounts, then have the copy of your ATO position, client's position on ATO, because Australian Taxation Office also has details of what is the position of your client has in terms of dues payable or refundable to him. So reconcile that. Same thing what we do, like whenever we audit any electronic, so any government liabilities, so any GST liability or TDS liability, we always reconcile it with electronic credit ledger, or we always try and reconcile it with the, say for example, if it is GST payable or so GST receivable, we check it with electronic credit ledger, which is with government. So same kind of analysis you need to do. So it's nothing which is reinventing anything, but it is applying your mind and understanding of all accounting, auditing concepts which you have learned are applying in India. Same you have to apply in Australian parlance. So check those reconciliations. Then ensure correct interest expense claims using loan installments. So you need to be careful in applying all those, because many times what happens is some small businesses, clients give you just installment amount that we have repaid, say, $100 of loan in this quarter. But what was the principal involved? What was the interest in those? So those kind of analysis you need to do. So you have to be careful that you need to split the installment into interest and principal, and have to make necessary alterations or arrangements in the financials, adjustments in the financials. So if you don't have access to financials, you can, or underlying, so if you're not supposed to do any alterations by your own, communicate those with your Australian counterparts that these are the things which we have observed and you need to correct those. So generate activity statement in Xero, because again, Xero being 90% use cases, I am using Xero as a example here. Reconcile net sales, we already discussed that, that what is net sales in G1 of business activity statement and what is there in my P&L. So I have those reconciliations always. Investigate differences due to timing, cash sales, or misclassifications. So that is also something you need to be careful. So another error which you may identify in business activity statements or in accounting records per se is, uh, say there was an invoice recorded in the books, okay, and the invoice was collected. So recovery of invoice happened in two phases. So say invoice was $100. So client received $50 in cash and $50 in bank. Okay. So 100 is settled that way. Now in small businesses where cash accounting is followed. Okay. Remember this is a very unique scenario. And these scenarios may happen and keep on happening. This is a general experience. So if you receive $100 and those are like splitted into 50 as a cash and 50 in the bank, then in the bank reconciliations, what happens is bank reconciliations, when you are clearing that bank rekna, so it may happen that you will double book the invoice because you have received the payment two times, right? One is in cash and one is in bank. So there is a possibility of you are recording the invoice two times. So careful on those specific aspect, and you can able to catch that when you see the outstanding report. So even if your debtors outstanding or receivables outstanding has nothing to do with your business activity statements, but it is pretty much important that you check that, because your primary accounting may go under toss if you have incorrectly recorded sales and you unnecessarily shown double GST liability. Actually, you collected once only, but in your accounting, it is showing twice. So unnecessarily, it is a liability for client. Okay. So be careful on those kind of instances. So review of overall financials, P&L balance sheet becomes very imperative for us when we are giving comfort for on business activity statement. And again, these business activity statements and financial statements go hand in hand, because ultimately what you're doing is you are reviewing the financial records, right? And based on that, you are preparing business activity statement. It is a summarized form of certain elements in your financials where you have to make certain government payments, right? So always careful, even if you're not doing any business activity statement review, but doing financial statement review or making financial statement for a client based on the underlying records. So always have these kind of reviews before you prepare financials. So generally, we say in Indian parlance that being a statutory audit guy, I will always talk a statutory audit language many times. That don't follow tick box approach. Many times we do that. That in an audit, when you are doing a sample, like vouching for a sample, you see 100 rupees expense book and you see an invoice 100 rupees, tick, done. Let's move ahead. So this is not the proper way of doing it, right? So you see what is an expense, whether it is relating to a business, whether it is approved and authorized, whether it is going in the correct ledger, whether the classification is right? Whether the relevant GST and tax impacts have been properly captured in that invoice. So all these elements we are supposed to check when you are doing an audit. Similar skepticism, similar mindset, similar thought process you need to apply when you are preparing financials as well. Because okay, you like Australian counterpart has given you access to zero. They told prepare financial statements, and you extracted the trial balance from zero. Even extracted P&L and balance sheet from zero to ensure your profits are reconciling with zero, and your equity position is also reconciling with your balance sheet as per zero. Because that is something we do as a part of completeness of financials which you are preparing, right? So in that, if you extract and you prepare the financials and give it to client, then it won't be of any value addition or qualitative use to client, right? So always review the underlying classifications, underlying impacts, even though you're not supposed to audit them fully, but you can always do these few procedures on the financials and underlying records and ensure the records are correct, right? So you also pass journal entries in the uh, zero and record. Then from the dividend distribution and return earnings are properly recorded in year wise. That is also important, that entries for dividend distribution and return earnings are properly and adequately reflected and recorded in the financials. So these kind of SOPs you can always have, and that will definitely help you in performing and delivering your jobs properly. So coming back to again our presentation. Uh, uh, so in summary, accurate financial statements ensure transparency for stakeholders, while timely batch lodgement avoids ATO penalties. So again, I say, as I said, both go hand in hand. So your financial statements have to be accurate, right? So if you are getting any assignment from overseas, so always ensure that you are making accurate financials. And how will you ensure accuracy? By reviewing all these details, that whether all these specific pointers have been properly taken care and adequately addressed and reported, right? And like if you fail to lodge bad statement late or within time, and if you end up not paying the ATO liabilities in time, there are definitely penalties and interest charges on the late payments and late filings. uh, what is critical from the perspective of both of these tasks? So conduct a 2026 threshold assessment for climate disclosures. So once you complete your financial statement review, or whenever you get that kind of assignment for a bigger clients, then you have to do that assessment, right? So, for example, if I am I am a private, or say I am a public limited company recently formed in Australia, and I really don't have enough manpower, or there is a shortage of skills which we all are aware of in Australia, and that's why we're having all these webinars and seminars and certification courses coming up. But I also don't have any person to work for me, so I have decided to outsource everything to India. Okay. So there is a firm named B and Company, who is a chartered accountancy firm to whom I am giving this work. So B and Company has to ensure that whatever is regulatory required, whether I am on top of those regulatory changes, requirements which are happening in Australian parallels. So climate control disclosures are applicable to public companies, right? So if my company is a listed company in Australia, so obviously I'll have to ensure that whatever work I'm doing for a listed company, which is formed in Australia, whether all those specific requirements, regulatory requirements have been met or not. So conduct that assessment when you get a job from or assignment from Australian overseas counterparts. Now, even if it is not mandated in your scope, giving this and sharing that without spending much time and efforts, which is the case, because again, it is given a monetary thresholds are given, and it is basically uh, uh, yeah, so accordingly you can definitely able to do this assessment without spending much time, but it gives a good value addition to the Australian client, and he starts developing trust on you, that he feels and senses that definitely this B and Company is going to help me a lot in my future endeavors, so let's have them for long term relationships. Then audit internal GST coding. Whenever you are doing financials or business activity statements per se, always review that GST coding. That is something we touch base and talk. Confirm upcoming lodgement dates in the ATO portal. So it is very important that you are having the tracks. So India, there is a lot of companies have that compliance calendar, right? That when is the PF due, when is the GST liability due, when is my XYZ government liabilities are due. So we do have that calendar. So over the years, as we are practicing in Indian parlance, we know the dates, we have highlighted them, we don't have to remember them. It eventually comes in our mind. But when you are working in for a separate jurisdiction, so it is worthwhile to have that calendar printed and published and having in front of your eyes consistently. That will definitely help you not missing out any dates. Uh, Now, what are the risks? Okay. And how you should be careful in dealing those risks is very important. If a BAS or financial report is found to be incorrect, the ATO applies penalties based on behavior. Okay. So again, if there is a reasonable care error, then they generally charge 25% of the tax shortfall. If it is a reckless behavior from the client, then it is 50% of the shortfall. And if it is an intentional disregard, that after sending a lot of communications by department, if a client is not paying liabilities on time, then it is 75% of the shortfall is the penalty. Then for significant global entities, penalties are doubled. So you may go and just check the definition of what are the significant global entities, and accordingly penalties will be doubled in those scenarios. Then failure to lodge the business activity statement. So above are you haven't paid the liabilities. Now there are fines for late lodgements. So ATO automatically applies fines for late business activity statement filings. For small businesses, it is roughly $313 per 28-day period late, capped at $1,565. For large entities, this can scale into tens of thousands. Now, why they are saying 28 days period late? If an entity involves any agent to help out lodging their business activity statements, basically it applies to some small businesses where they don't have expertise or in-house expertise, and they don't want to take risk. They generally appoint a tax agent who generally does all these activities for business unit. So if you are filing through tax agent, there is an additional 4 weeks extension given by the ATO, that you can take 4 more weeks if you are filing through tax agent. So that these are the legal provisions which is benefiting small businesses who are filing their business activity statements through agents. So that's why that 28 period cap is additionally inserted. And climate disclosure liability with new 2026 mandatory climate reporting, companies greenwash greenwashing risk, providing misleading data about emissions or climate risks can lead to ASIC enforcement actions or shareholder class action lawsuits. So, if climate related disclosures are mandatory for an entity, they have to ensure that they are giving proper disclosures as given in SSB S2. So S2 is, we understood earlier that S1 is generic and who provides exact what you need to disclose, right? So you have to comply with S2 disclosures. So it may not be applicable for private entities as of now. But if I, as I given an example some time back, that if you end up getting work for a listed client from Australia, so always have these kind of thought process and assessments ready with you. Okay. Common and operational risks. There are silent risks that occur during bookkeeping and preparation phase. So these are silent risks. So again, GST misclassification. I won't go into much details because we have discussed and gave it a thought during our respective slide discussions. So GST misclassification is one risk. PAYG withholding errors happen. So miscalculation of tax for contractors versus employees. Uh, so those kind of things happen, data matching discrepancies. Uh, so what happens is that AI tool is used to cross match business activity statement data against bank records, property sales. So same thing in India, all the transactions or most of the transactions in India are PAN based, and those can be tracked by income tax department as well, right? So those kind of tracking also happens in Australia with respective other government records which are in where your names are appearing. So those kind of data mismatches could happen. So it is always better to have reconciliations from all front. So that's why reconciliation plays a very important role, whether you prepare or lodge business activity statement or you work on a financial statement per se. Strategic and business risks, cash flow squeezes. Again, there may be some cash flow issues which company may have, which may result in like non-payment of tax liabilities, or you may forget that they have collected belongs to the government. So, using GST or PAYG funds for working capital creates a massive risk when the payment deadline arrives. So, for example, I collected GST on sales and I used it for my working capital funding. So ideally, you should keep it separate, right? Because when a liability comes, you'll able to pay it. If you use that fund for your working capital, then definitely you are going to face a situation of cash crunch, right? And then you will not able to pay your liability on time. Then director liability, then audit red flags, consistently reporting a refund position in BAS and not showing any capital growth explanation will almost certainly trigger an ATO verification call. So again, it's very logical that when you are reviewing the records of the client, always see that why only capex is being incurred, or why there is no capex incurred and no revenue being generated and only expenses are coming in the books, and there are net refund situations always in GST. So your professional skepticism, very important that you have to be professionally skeptical. You have to maintain that skepticism throughout. So wherever you work in India, you work in Australia, you work any part in the world, always have that professional skepticism. So all our standard material issued by ICI, which works as a Bible for us in dealing any situation, these are very true, and you will definitely able to deliver well if you always have those specific principles of auditing standards in mind. So, just to summarize, late lodgement setup, how to address those risks. So, late lodgement setup, electronic service address notifications, and use a BAS agent for the 4 week extension. So, that definitely helps. Then, electronic service address is nothing but a calendar which will always give you trigger that now the due date for this particular quarter's business activity statement filing is coming close. Use softwares to avoid manual errors. Maintain digital copies of all your tax invoices, no credit. So whenever a client is asking you to do an accounting, or if you're reviewing the business activity statement or preparing financial statements, always ask your client if that accounting work is not with you, but accounting is in Australia, but you are reviewing certain business activity statements and helping them prepare financial statements. Always ask them to maintain those copies. And if you are doing your own accounting here, the accounting is outsourced to you, you have to maintain all those copies with you, because 5 year, 7 year, what we discussed earlier will apply here. Climate risk, ensure climate risk disclosures are backed by reasonable and supportable data as per AASB S2. So S2 gives and lists down a lot of principles which you have to refer. Uh, then what are the career opportunities available in terms of ICI members? So you can always have employment with Australian CPA firms, which requires visa requirements. So even an Indian chartered accountant is recognized in Australia. If you really want to work in Australia, you can always go on visa and do that. Then you can always have offshore team leadership roles. Then you can have virtual CFO and advisory services. And there are cases in the market where an Indian firm has built more than 10,000 hours monthly, and they're really doing fantastic job since last 10 odd years. So there are certain examples. Even the some of the industry reports like Grandview Horizon is one entity which does a lot of research globally. So they have said revenue for 2024 from outsourcing activities in Australia was expected at 3,566 millions, and it is forecasted to grow at a CAGR of 9% and reach 5,937 million by 2030. So you can see there's a huge potential for us to explore and work on all these Australian assignments, and significant portion of whatever revenue which has been generated and what is expected to be generated is finance and accounting. So there is definitely a huge scope for us as an ICI members to explore those opportunities. Focus on your quality and deliverables. You will definitely able to mitigate that. And what are the challenges? I'll quickly touch base because we are running out of time, I know. Philippines is major competitor because it has age over timing difference, and the communication pattern or the people in Philippines have better communication skills than Indians. Okay, so there's a lot of Philippine work goes in Philippines from Australia. So if we really work well and work on the few shortcomings which have been identified in us, we can definitely able to conquer Australian market and beat Philippines. That should be our agenda. Indian market is also competitive. Although we say there are a lot of opportunities in India also, the market is competitive. There are a lot of CAs who have already started like exploring those opportunities since last decade. So this you need to this you need to always keep in mind that there is a good possibility, but the market is also tight in India. Again, some challenges which as a member you may face as market is competitive, your margins may not be that significant. Then employee turnover, which is again a common risk in our profession. Like we train a person by investing on him, say 1 year, 2 year, and then he leaves. So he carries all the training and joins another firm. So that really impacts us, right? So same scenario happens in this market as well. Then you have a lot of training costs because we are not used to work in this Australian environment, right? So that training cost also you need to evaluate that you are spending the amount on training those people so that they will able to perform at an Australian level. So in summary, outsourcing is professional accounting work. Zero is a 90% use tool where judgment is critical, because although tool is there, you have to be ensuring that adequate accounting and accounting principles and concepts being used. Ethics and communication define success. So you do financial statement preparation job, business activity statement job, or any other job for Australia for any matter, your ethics and communication has to be on top. ICI members have strong global opportunities. So we have a very strong global opportunities. You can travel to any country, start working. Indian CA is recognized in Australia. You don't have to be necessarily pursue any CPA Australia or CA Australia, New Zealand for that matter. You are equally recognized in the fraternity in the Australian market, and definitely seeing the current market scenario in Australia. The Australian economy is really booming well. So there is definitely a good amount of potential available to us. So what you need to do, we really need to have those kind of associations with CPAs who are working in Australia. So starting point for us is generally a lot of CPAs who are an Indian origin and they are settled in Australia or currently work in Australia. They can definitely help us out in setting up their offshore offices in India where they can get good edge on cost and quality, and definitely we can conquer the market. So thank you very much, all of you and ICI for giving me an opportunity to present my thoughts on Australian outsourcing, that too specifically on financial statement preparation and business activity statements. So I'll just stop sharing this presentation and hand it over to Rutuja for question and answers, if members have raised.
Yes, thank you so much, Shelly sir, for this such an enlightened session. Frankly speaking, even from the tax background, I could understand many of the aspects. So definitely, it the entire credit goes to you how to explain in a very simple and simplified manner, as well as relating to the I think practical aspects that is very much relevant in current scenario, rather than having a theoretical aspect. So
Yeah,
great session. There are certain questions which the participants have raised. So I'll just take up one by one.
yeah, yeah.
Uh, so the first question is how can get the zero certification and how can we learn the zero software? That was their question.
Yeah. So Zero has learning modules as well. So you need to initial. I will always say that go through the YouTube videos. There are a lot of YouTube videos available for beginners. Then there are certain certifications. So we can always I can always help in sharing those specific connects where you need to write an email to them or from where you can get those subscriptions. Definitely, you need to pay some subscription fees for usage of Zero, and if you end up having any association with any US Australian practitioner who is willing to give you some work, he will definitely give you an access to Zero. So once you get an access, I think once you start using, you will definitely able to learn. But definitely we can help you out in providing some connects in terms of from where to get the subscription and more details around it. And when you get the subscription, definitely you get that learning module from them where before you immediately start working on a client, you get that learning modules where there will be some test companies created, and there you can just navigate in the software and learn how to use it. And that way you can get yourself trained on Zero.
Perfect. The next question, I think you have already answered that, but how to obtain such assignments? You did mention about the Australian
Yeah,
ICI part and the CA
yeah.
degree, which is relevant in Australia as well. If you can just throw some lights how to start getting these kind of assignments from Australian perspective.
Yeah, so again, it depends on what kind of relationships, associations you can explore. Definitely need to put in an effort because it's not very easy to get overseas work because given a scenario like say in Indian market, which we experience, that getting a client in India itself is a nightmare, right? You need to put a lot of efforts. You need to convince them. You need to demonstrate how good you are compared to your other peers. So same thing happens in Australian parlance, and that too to convince them to give work in India is definitely challenging. But having your associations with practitioners in Australia, and even from Australian perspective, CPAs who are basically an Indian origin CPAs, there are a lot of Indian origin CPAs working in Australia. If they can also come up and like give their hand to us that yes, we are willing to support you, and that will also benefit them. So it's just matter of that creating just pushing it a little bit. So your relationships, your connections will definitely help you. And again, as I said, quality plays a huge role. Your communication and quality. So if you demonstrate that, it will definitely help you to gain that trust and get the work. So it may happen that maybe just a possibility I'm throwing here. Someone like who is well established in this business or in this kind of outsourcing has already set up in India, say last 5, 10 years, and there is a lot of work coming to him because of over the years he has built that trust. So you may start connecting with him. You can ask him if he can outsource some of his work to you, as he's overloaded, overwhelmed with opportunities or assignments right now with his hand. And if you really deliver them with quality and timely and accuracy, I think definitely there is a high possibility for you to get good amount of work. And yeah, you have to build up your relationships. That's the best way you can get that work.
Perfect. The
Yeah.
next question is if you can kindly explain the BAS demo statement once again for the better understanding. And just related question is in BAS, we can get the credit of indirect tax from paying the tax liability of of direct tax. Like in India, we cannot do. So if you can just explain the BAS statement once again, that would be great.
Okay, fair enough. Is there any other question which is like explanatory? So at end, I will just again run
Sure.
through the BAS
Uh,
statement. Yeah.
there's one question that please, in case possible, then provide a practical scenario of filing of BAS statement. And one more question is there from where I can get the SOP for BAS.
Okay, so SOP format is something which you need to build up your own. There's no standard SOP, but again, based on your understanding or general awareness, you can create one of yourself, or you can reach out to me. I can also help out in some other manner that generally, but it is again, you need to build up based on your experience and whatever is given in the requirement, that what are the criticalities you need to factor in while preparing the or reviewing the batch statement. So that is something is not readily available in the market. You need to set up your own, considering how you are comfortable, whether it is an Excel format which is useful to you. But these are the pointers which you always have to keep in mind, that just remember you are doing an audit of a company, that if you are doing an audit, what kind of scenarios you will check. So just have that SOP. And again, referring to Australian laws relating to GST, just have a noting of those, that if there is an insurance payment, I have to take 70% for GST, 30% I just expense it out. Then fuel tax credit. So there are for heavy vehicles, PAYG, how the tax is calculated. So those kind of scenarios you can Google it. And fortunately enough, Australian government has made a lot of documents public. So that will surely help you in setting up your own SOP. And again, it all depends on what kind of client portfolio you are handling from Australian perspective, right? So if you are handling a large portfolio, then your requirement may completely alter than whatever sample I shown you. So it all depends on what client portfolio you are using, and you need to set up your own depending on what is convenient to you, what is use case scenario in your office. That way you can set up the SOP, but there's no standard format as such.
Perfect. I think there are no other questions
So,
from the participants.
so I will just again share my screen and
Yes.
show that sample business activity statement report. Mm. I hope my screen is visible. Uh, yeah. So, I'll just go through line by line. There are total sales, as they called it as a G1. The label used is G1. So these are total sales company generated during the quarter. Then you have salary payouts, total salary and wages, amount withheld from payment shown at W1. So this was the salary amount, and sorry, and based on that, TDS of 9,480 has been accounted. So this we need to pay. Then, as sales were GST free, there is no GST liability as such, but there is a tax liability in terms of salary TDS, not income tax, right? So again, the question which was asked, that whether you can get credit of income tax. So the answer is no, because income tax liability is separately tracked and which you need to pay separately. So when you get an ATO statement, you will have tax liability, income tax liability as a separate element, and GST liability as a separate element. Okay. So it is only uh, PAYG tax withholding credit you get while paying the amount to the credit of government. Okay, ATO. So GST on purchase is 3,747. So here if you see 9,480 liability was on account of PAYG withhold, and 3,747 was GST paid on purchases. So on net basis, my liability for this quarter was 5,733, which I have to pay to the credit of ATO. So that's how it works. Let me also share one sample of ATO statement if I can get it very quickly. Just allow me half minute. I'll just find out. And Because that also helps in understanding. That may help. Just give me a sec. Okay, fair, fine. I got one very quickly. So I'm just sharing my screen again for benefit of all, just to show you how the tax statement looks like. So I hope my screen is visible. So basically, again, this statement is from 3rd September 23 to 3rd September 25. So this is nothing but electronic credit ledger kind of. It's a statement which company has with the ATO. So you see EFT refund for GST. Okay. Then there's an interest charge. uh, GST, then there's a credit of fuel tax credit. So I mentioned na, that fuel tax credit also you get credit. So this is nothing but there is a credit of fuel tax credit being received by the company. So again, GST liability is shown separately, fuel tax credit. So this particular entity, I think, doesn't have any tax liability. But yes, if you have any tax liability, no, you will have a separate line item here as a tax liability, income tax liability. So this is how you can track and reconcile your government payments, ATO payments, and that will help you out. But I don't think you get the credit of direct taxes like income taxes against GST. It's a separate liability which you have to pay separately, and GST is a separate liability which you have to pay separately. Only for payroll taxes you get a credit while paying GST, and that line item also generally comes here. So that's how you show it. Rutuja, any other question which we may need to address?
No, we don't have any other question. So I think there we can come to an end of the session. I still give 2-3 minutes for the participants. If any questions
Yeah.
are there, please. We have 15 minutes left, so we can have a series of questions. If anyone has questions, please raise it. Uh, Gunjan, if you can check any questions have come.
Just again for just re-emphasizing for members who have participated in this webinar, if you're really interested in exploring how financial statements prepared and what's the disclosures being given, you can always go through some listed entities in Australia. So on their website, you can definitely get the financial statements and you can start going through. You will definitely able to understand what are the critical things, and you can definitely able to correlate with what we have discussed today. So that will definitely be helpful. So that really helps, know that you learn something today, and if you practically see it, it really gives more clarity as an individual. And that really helps if you get such kind of an assignment in your future.
Yeah. Just one question I
Yeah,
would like to ask
yeah,
Shailesh sir. Uh,
yeah,
you might be aware that in 2022, the regulations for Foreign Exchange Management Act changed, wherein if an Indian company has a subsidiary in Australia, they have to mandatorily get the accounts audited. And
yeah,
thereby, there was I think, quite a lot of audits were undertaken for the subsidiaries which are based out of foreign countries, even if the host country doesn't require them to get the audited. In that case, post 2022, do you see that there has been a multiple request been raised for getting the audit done of Australian subsidiary? And also another aspect is, unfortunately, RBI, while changing these regulations, did not make a reference as to who should do the audit of these financial
yes,
statements,
correct,
whether it should be an Indian chartered accountant under the special purpose framework, whether they can do as per the Indian gap, because the gap is also not mentioned, unfortunately.
correct,
So people
right,
are doing so. I have seen Indian chartered accountants who are using special purpose framework given by the ICI guidelines to conduct the audit of the financial statements of a foreign subsidiary in India
correct,
only for the purpose of APR, and which is the annual performance report basically.
yeah, correct,
And that may not be required in Australia, right? As a foreign subsidiary,
right,
maybe they are not crossing the threshold for having
yeah,
even the audit done. So,
right.
in that case, have you received such kind of a request to done? I mean, prepare the financial statements in the Indian gap for the Australian subsidiary?
Not a pretty specific case I can remember in last couple of years, but definitely for other countries, we are getting such kind of scenarios where, for APR purposes, you need to have an audited financial statements. And again, wording of RBI is very confusing, as you rightly said, that CPA or equivalent can sign on those balance sheets, but there is no mention of any jurisdiction. There is no mention of framework in which you need to sign. So there is absolutely no. So some companies are fine and taking a stand that you prepare a special purpose financial statements and that only we will submit. Some are taking a stand that we will get the audits done from overseas, even though it is not mandatorily applicable there, but we'll get it done from overseas and we'll share the audited financial statements of those subsidiaries to you. So a lot of MNC clients. So I or many people who do a lot of MNC clients. So many times MNC clients do get their subsidiary accounts audited overseas only. Because they have their presence overseas and full control over there. So they generally get their accounts audited and they send those financial statements to us. So that really helps in submitting for APR purposes. So RBI also doesn't have any issue per se. But again, it's quite odd scenario. Not pretty much clear that how we should be dealing with those scenarios. But yes, this kind of issues we do face, and we are facing currently also in some entities where,
Yes,
yeah, yeah. So
right.
not
And
specifically
probably
for
because these
Australia, but yeah,
sound, yeah.
yeah.
Yeah, yeah, absolutely. I mean, similar thing has been experienced by me also. And
Mm,
as to why there is a difference in the entities reaching out to the host country, CPAs or Indian Chartered Accountants, is again depending on how the bankers are accepting those audited
correct,
financial statements or not.
correct,
Few bankers have
absolutely,
provided reservation that they will not accept Indian Chartered Accountant audit report,
correct,
and it has to
correct,
be provided by the host country's foreign subsidiaries
correct,
CPA.
correct.
So those are the also, and
Mm,
I've seen that recently the RBI has also
yeah,
asked questions, whether they have raised any questions to ICI. I'm not aware, but though they have raised questions to all the AD bankers as to give an explanation as to how Indian
exactly.
Chartered Accountant
Yeah,
is eligible to do the audit of
yes,
foreign entity subsidiary. So that
correct,
these
correct.
issues are there. We
Yes,
have
yes,
just received two
absolutely.
more questions,
Okay.
Shailesh sir. We can take up
Mm,
that. We have time.
yeah,
The
yeah.
first question is, which types of Australian businesses file BAS? If you can just throw some lights on that.
So basically, all business owners or entities which are registered under GST are mandatorily required to file business activity statements. Okay. So again, you may be a small business or a large business, but if you are registered for GST, And so you need to file business activity statement. So that's the precondition for filing business activity statements. So even if an individual who is registered for GST and he is having a proprietorship kind of business running and it is GST registered in Australia, you have to file BAS for that.
The second question is which services are most commonly outsourced to India by Australian firms?
So primarily it's accounting and financial statement related services. So there are a lot of accounting firms in certain parts of India who are providing these accounting services to Australian counterparts for more than a decade. So they are doing a lot of accounting work. Then so what happens in all these MNC or not MNCs, but all these Australia or US or Europe for that matter, you have digital copies of evidences available. So it becomes easy for Australian counterparts to have them on shared drive, given access to Indian counterparts. And then Indian counterparts then does the accounting either in Xero or MYOB or any other QuickBooks, Zoho, whatever software they are using. So that really helps. So basically, predominantly, it is accounting work which is being outsourced from Australia to India. And financial statement preparation is also sometimes given to India. But again, if the entity is not eligible to get their accounts audited, so the financial statements generally doesn't become a priority. Tax filing preparations, like annual tax return filing preparations, business activity statement preparations and review, that also comes to India, and accounting. So these are the three primary services which are being outsourced to India, along with financial statement preparation. But I will say accounting is more significant portion compared to other services. Accounting and business activity statement and tax return preparation. So these three things comes to India. Now again, lodgement purposes for lodging the business activity statements or tax returns. Indian chartered accountant sitting in India will not do that, because for you having it to be registered under ATO as a tax agent, you need to have your My Government ID, which is nothing but it is applicable to person who is already in Australia. So it is applicable to person who is Australian PR holders. They can only register themselves as tax agents. So what work in India is done is you do all the review and preparation work, and then later on the filings and other administrative procedures and filing procedures being taken care from Australia. It may also happen that your counterpart in Australia may give you access of his login, which is not the best way of doing it. But in some cases, it may happen he will give you an access of his own portal, his own login, which he is using to access ATO portal, and he may ask you to lodge from India. That you can do, but again, it depends on what kind of associations, agreements, and relationships and trust you have with your Australian counterpart. So that way, generally, the work happens.
Yes, great. So I think there are no further questions. So here I think we can close today's session. I just give a vote of thanks for all the participants for joining today. I can see that the number crossed almost 300. So it was a great attendance for today's session. As we come to the close of this today's insightful session on the accounting and the financial statement preparation in Australia, it is privilege to deliver the vote of thanks. First and foremost, I extend our heartfelt gratitude to our distinguished speaker, Mr. Shailesh Kulkarni, for sharing his expertise, his practical experience, a quite detailed explanation as to how the Australian accounting framework works, what is the compliance requirements, how the practical approaches to the financial statement preparation, which is greatly, I think, enriched and learned our understanding. Thank you so much, Mr. Shelley, sir, for that. And I would also like to thank the organizers, the ICI committee members, for their meticulous planning, seamless execution of this session. And for the entire Udan series, I believe the participants will get a great learning out of it. and your efforts ensure that we could learn even in this structured session. So a special thanks to all the participants as well for your active involvement and the great questions. And I believe you have got multiple learnings out of this particular session. Uh, on behalf of everyone present, I once again express our sincere appreciation to the speakers, organizers, and participants. Thank you for making this session as a success. We look forward for the more opportunities for the learning and the collaboration on this aspect. Thank you so much, everyone.
Thank you, Rutuja, and thank you all the participants for your active participation. Really enjoyed delivering a webinar. Many times you don't get to see people in the webinar, but it really was a wonderful experience. I hope it has really ended up having some kind of validation to you, and hoping to be presenting again. Thank you very much.
Thank you so much, sir. Thank you. Over to
Thank
you,
you.
Kunja.
Yeah.
Yeah, yes.